G'day everyone, welcome back to Pete's Investing. Today's March 29, 2023. This is the US crude oil price update. Now, we're looking at three timelines here, the daily, the 4 hourly and the hourly. And on the daily, it's still in a pretty sharp decline on the CCI 1500 with its moving average 400. And that's also, you can see there by the price chart as well. On the 4 hour chart and on the hourly, you'll notice the CCI is broken up through their respective moving averages. So predominantly, I would be taking short positions only, unless you really want to trade the really small time frames like the hourly based on the 4 hour, or even the 10 and 15 minute time frames. But again, that's pretty volatile and risky. I would suggest wait until all three timelines are even on the hourly. If I was going to trade, I'd wait till the daily and the 4 hourly were aligned in terms of the same direction. To drill down on each of these, since yesterday, we did draw this minor resistance area being formed, but it's broken through that, so I'm going to delete that minor resistance area, and we've still got this diagonal descending trend line, and then also this major resistance area that was formed some time ago. So just be mindful of that. We're still on a downtrend, and we need to see a break above this descending trend line to be more positive about going long, but especially the CCI breaking to the upside and be more positive. For those new to the channel, the reason I mentioned the CCI 1500 with the moving average 400 closely aligns with the moving average 200 of the price chart. So again, take long trades only when the CCI is in an upswing like it is in those areas, and take short trades only when it's in a downtrend. Sometimes, the reason I primarily look at the CCI is because it sometimes gives us early indicators and early signals to get out of the trade early, as opposed to staying in it compared to the moving average of the price chart. So just be mindful of that, and that applies to all time frames. So again, shorting positions only primarily, and especially if the 4 hour and the hourly are in shorting positions, but at the moment they're not. So what's the 4 hour done, the 4 hour time frame? You can see there on that timeline there, between that high and that low, the price is broken through the 50% retracement where it was in our last video, and it's now heading towards that 61% retracement level, and that aligns with that descending trend line which was drawn. So we may see a breakthrough there, or possibly bounce from there if that continues to the downside with the CCI. On the hourly chart, I've drawn a Fibonacci extension between that range and that retracement, and you can see there that closely aligns, that diagonal trend line closely aligns with the 123% extension level. So again, if you're really risky in your trades, take only hourly or even 15-minute, 10-minute time frame trades based on the 4 hourly timeline. But again, you're risking it because the overall trend is in a downswing, but the minor trends are still in an upswing slowly. At the moment, one trading idea that I've used is this fractals breakout. So if you're in an uptrend and you want to take long trades, take a trade when it breaks above the fractals. So you could have taken a trade there, and possibly even there, and your target will be somewhere around the 123% level if it gets to that level there. But again, I would advise that against that because you're going against all timeline trends. So that's where we are at the moment. If you're not in a trade, I'd sort of wait it out until they all align, either all in a downtrend or all in an uptrend eventually. And for the uptrend to occur, you want to see a break above this key resistance on the daily, and you want to see that daily CCI break to the upside of its moving average. To understand how to properly trade using the average down, we don't use stop losses. Reference the links in the description below. Subscribe and like the channel. Support us even more on Patreon, and we'll see you in the next video. Thanks, and see you next time.